Good morning. My name is Maria Vaca, and today I will be presenting my economic research on whether college is still a worthwhile investment in today's economy. With rising tuition, growing student loan debt, and rapid technological change, higher education is increasingly viewed as a financial risk rather than as an opportunity. Many individuals question whether a degree still provides a meaningful economic value. My research evaluates whether college continues to generate a positive return on investment and supports upward economic mobility in the modern labor market. As the cost of living rises, Americans are reevaluating traditional investments, including higher education. College has become one of the most questioned financial commitments. Concerns include increasing tuition, reduced federal aid, rising interest rates, and fears that automation and AI, artificial intelligence, may eliminate degree-based jobs. In fact, 3 out of 4 Americans report that college is too expensive, and those concerns have only been intensified since 2022. This skepticism raises an important economic question about the long-term value of higher education. This leads to the central research question of my study. Does college still provide a positive economic return despite the rising costs? Based on economic data and theory, the answer is yes. On average, higher education remains one of the most reliable tools for upward mobility when students make informed decisions regarding cost, major, and institutional choice. To evaluate college and higher education as a whole economically, I have applied the concept of return of investment, or ROI. ROI measures the benefit of an investment relative to its cost. Research consistently shows that individuals with a bachelor's degree can approximately earn 500,000 more over their lifetime than individuals without a degree. When compared to the average total cost of college between 120,000 and 240,000, this represents a positive net return. From an economic perspective, higher education functions as a long-term income generating asset. And here is the key economic insight of my research. Not going to college has an opportunity cost of $500,000. Even when accounting for student debt, the cost of not investing in higher education is significantly higher than the cost of attending on average. This reframes college not as a gamble, but as a calculating investment evaluated over a lifetime. Beyond earnings, education also reduces economic risk. College graduates are about half as likely to be unemployed as individuals with only a high school diploma. This translates into a more predictable income, stability across business cycles, and protection against long-term unemployment. From an economic standpoint, education acts as risk mitigation by lowering exposure to labor market volatility. And these outcomes are supported by three key economic concepts. First, human capital theory explains that education increases productivity by building skills and knowledge that raise labor market value. Second, opportunity cost highlights that while students sacrifice short-term income, the long-term earnings gain outweigh this trade-off. Third, positive externalities show that education benefits society through innovation, civic engagement, and economic growth. Together, these theories demonstrate that higher education benefits both individuals and the broader economy. Data for the Bureau of Labor Statistics reinforces these theories. Individuals with higher levels of education consistently earn more and experience lower unemployment. This pattern has remained stable since the 1970s and persists across economic cycles, indicating that education provides long-term income stability rather than short-term gains. But concerns about automation are valid. According to Schumpeter's theory of creative destruction, innovation eliminates some jobs while creating new ones. While artificial intelligence may replace routine tasks, it increases demand for critical thinking, communication, and adaptability, skills developed through higher education. Colleges are adapting curriculum to prepare students for a changing labor market rather than becoming obsolete. College also generates non-monetary return. Networking opportunities, student organizations, and collaborative environments help individuals build social capital. These connections improve job matching, career advancement, and long-term success. In an era of increasing social isolation, the ability to connect is itself an economic asset. But the cost of college is real. Tuition, housing, and textbooks continue to rise with the years, and student debt can take years to repay. especially for low-income and first-generation students, much like myself. However, it's important to note that billions of dollars in scholarships and financial aid go unused each year, and many institutions now offer full tuition coverage below certain income thresholds. These resources can significantly reduce financial barriers when actively pursued. But the critics say that college is far too expensive, that it takes too long to pay off, and is riskier than alternatives such as trade careers. As a result, many individuals delay or abandon higher education in favor of immediate income. But from an economic perspective, this argument focuses too heavily on short-term outcomes. Education should be evaluated like a long-term investment. Stocks do not triple overnight, and neither does education. The primary risk associated with college comes from uninformed decisions, not from higher education itself. But it's also important to be smart about where you go and how you do it. Not all degrees yield the same results. Fields such as healthcare, STEM, and computer science show lower unemployment and stronger earnings due to transferable skills. Institutional prestige matters far less than one might think, and cost efficiency and strategic planning are the two most key components to going to a higher education. An affordable institution can generate the same economic return as a prestigious one when chosen strategically. In conclusion, higher education remains a powerful driver of upward economic mobility when approached strategically. It provides higher earnings, lower unemployment, and long-term stability in a rapidly changing labor market. Despite rising costs, college is still a worthwhile investment in 2026 when evaluated through sound economic reasoning. Thank you and have a great day.